Yes. Welcome to another educational video in Hezee Academy. Today we're going to dive deeper into market structure, especially how to determine the major and minor structures, because you need to understand how the market breathes across time frames. If not, you won't be able to scale down from your structural time frame down to your entry time frame before you can even think of executing a trade. Then you must understand how the market breed, and this video answer that question in a clear and vivid term. This is answerable in all currencies, cryptos, commodities. Okay, so you must be able to determine the current price on a higher time frame, then scale down to your lower time frame to find the pattern or candlesticks formation that you're looking for even before thinking of executing a trade. So if you're that type of person that, like, for example, currently, what's the current price of the market? We're creating high on 4-hourly time frame. This might be a pullback on daily time frame to take short. Meanwhile, on 4-hourly time frame is telling us to go long. So you must be able to relate the higher time frame to the lower time frame in order to find the good entry or perfect trade setup. So if you're that type of person that I've been asking, what is major structure, what is minor structure? How do I scale down from a higher time frame to lower time frame? Man, stick around, as our custom is at the end of every video I'm going to give you one actionable thing to do to skyrocket your understanding in terms of market structure. So if you find this video valuable, consider subscribing, turn the notification on in order not to miss the next coming educational video. So without wasting much of your time, let's roll the intro and dive into the video straight. Alright, let's go. This is the fundamental breathing of the market. The market moves in an uptrend, creating high highs, creating high highs, higher lows, higher highs, higher lows, right? Now, just a recap from the previous video. Please, if you have not watched that video, it is the part 1 of this one. This one is just the continuation, okay? Now, a high from just a recap from the high is created when there is a break of structure from on top here. Okay? When there is a break of structure, then a high is confirmed. When there is no break of structure and it stops here, a higher high is not confirmed. From the last video, this is the number 1 sign or the first sign of a market reversing. Okay, so now let's go. Take it that in your structural time frame, the market is creating high highs and higher lows, right? Understand this. This is the basic concept. If you don't understand it, please go. I'll link the video description and the video link in the description or within the screen. Preferably go watch that video before coming back here, because this one will dive deeper into the market structure itself. The market moves in this fashion. Alright, having known this, let's go down to extend it. Okay, let's go down to extend it. Now, these impulses and correction, these high highs and high lows, whatsoever. Just this one now, I'm taking 4-hourly time frame as an example. Imagine this pullback now on an hourly time frame. It will be creating series of lower low, lower high, lower low, lower high, lower low. The whole of this movement, I'm coming, this movement here will be creating series of lower low, lower high, lower low, lower high on the lower time frame. That is the 1 hour time frame. and this impulse will create a high low, high low, right? Now, having known that, again, this is how it will look like on hourly time frame, this pattern here. Now imagine this 1 hourly time frame now on 15 minutes time frame. You must know when there is a violation of structure on the lower time frame for the higher time frame to pull back or retest before the continuation. Imagine this hourly time frame now on 15 minute time frame. This leg alone, this might just be like 4 candles. Okay, this might just be like 4 candles, but here on 15 minutes it will be creating higher high, higher low, higher high, higher low, higher high to this point you are seeing here. This point you are seeing here is the top here. Okay, is the top here, waiting, then the market value structure coming back for a pullback on the hourly time frame, and the trend continue in an uptrend. Okay, now let's try to relate everything all together. Space, I'm lacking space. Okay, now I want you to relate this 15 minute time frame now back to what? 4 hourly time frame, 15 minutes back to this 4 hourly time frame. Now, what will this time frame look like on this 4 hourly time frame? What will it look like? That means this one will be, then what's happening? Then this leg alone here will be creating series of high highs, high low, high high. Now, the whole of this movement, like this, the whole of this movement inside this box, might just be this push phase on a 4 hourly time frame. Just this leg might be the whole of this high low, creating and be going up, violating structure, retesting and moving on. This might be just this leg on 4 hourly time frame. Okay, so you must be able, now if you're on 4 hourly time frame, you're looking forward to take a trade, you must know when there is a violation of structure on lower time frame in your zone. Don't forget that, in your zone. Once there is a violation of structure, know that our 4 hourly time frame is retesting. Please, I want to give you like time frame correlation. If you're considering 4 hourly time frame, get used to 15 minutes and 5 minutes, or 15 minutes rather, preferably. If you're using 4 hourly time frame as your structural time frame, make sure that your entry time frame is 15 minutes. Okay, and if you're using an hourly for your as your structural time frame, make 5 minutes as your entry time frame. If you are using daily as your structural time frame, make hourly your entry time frame. With this, you make trading very, very simple. See, the best setup you can have is the one with the simplest form of approach. Okay, now waiting for pullback on 4 hourly time frame. For this point here to occur, this form of structure, there must be a violation of structure here. This zone must violate, this zone here must violate, and once it violates, you come back for a retest. That's the initiation of this long phase, and this is where you profit the most. Okay, that's the whole concept of trading: buy low, sell high. Okay, now once you are able to identify this, you can now execute your trade. Now once you relate this is how the whole movement will be. The whole movement will be creating series of higher highs, higher lows. 15 minute time frame if 4 hourly time frame is your structural time frame. Okay, if 4 hourly time frame is your structural time frame, then this more often than not, you know, the market is not actually picture perfect, but more often than not, this will be your movement on 15-minute time frame. And what you're always looking at, if this is a pullback on 4 hourly time frame, this is the impulse on the 4 hourly time frame, the pullback on 4 hourly time frame, the impulse. Your biggest bet is how to get into trade from these zones here. All right, this is where you're looking for to get into trade. This is where you're looking forward to get into trade. Again, this video is linked with the previous video. I told you when a downtrend is forming, then before you confirm a reversal of that downtrend, there must be a violation of structure. Look at this point I've marked here. Before this exhaust pullback phase begin, it violates structure and it start creating high, lower low, lower high, lower low, lower high. Okay, and look at what happened. It creates equal lows here. The moment it creates equal lows here, then it violates structure, start creating a higher low, higher high, higher low, higher high, higher low, higher high, higher low, till when it has overextended, or when the market is overextended, then the people start selling it again, which will result into violation of structure, creating a lower low, lower high, lower low, lower high, failure to break below, equal bottom, violate structure again, creating. Now this is your biggest bet, okay? Because excuse me, I just wish I hope you're grasping what I'm relating here, because this point here you are seeing here is this point, and until you are able to get into trade, this is one of the confirmation to tell you that okay, you know, like there is no concrete way to know that this, to pinpoint that this is where this thing will end, until this is when you start gathering confluences. One of the confluences that okay, there must be a break of structure on lower time frame. I say relate 4 hourly to 50 minute, relate hourly to daily, and relate 5 minutes to what, an hourly time frame. With this, you make trading very, very simple. Okay, once you see a violation of structure like this, no, more often than not, a higher high on 4 hourly time frame is about to be created. And once you see a violation of structure like this, when a higher high is created on a 4 hourly time frame, more often than not, a pullback on 4 hourly time frame is about to take place. When there is a break of structure on a lower time frame like this on 50 minutes, more often than not, a higher high again is about to be created on 4 hourly time frame, and vice versa. This relates to all the time frame. This is how you do your multi-time frame analysis. Scale it down to from 4 hourly time frame to 15 minutes. Now let's go into the chart. Let me show you with a live example on how it is. This is 4 hourly time frame gold XAUUSD. Before we go into breaking down the charts, I want you to sit on your own and ask yourself, what type of a trader am I? Am I a scalper, an intraday stroke day trader, or a swing trader? If you are a swing trader, for example, you look forward to hold a trade for days or weeks and months even. And if you're an intraday stroke day trader, you look forward to hold a trade within few hours to get in and out of the market, maximum 24 hours. And if you are a scalper, you're looking forward to getting in and out of the market within maximum probably 1 hour, 2 hours, some few minutes, and just getting in and out of the market. If you've decided that, then you go, okay, and I'm giving you this time frame correlation right now. If you're a day trader, consider daily above as your if you're a swing trader, consider daily above as your structural time frame. And if you are a day stroke intraday trader, consider 4 hourly time frame as your structural time frame or your higher time frame. And if you're a scalper, just want to get in and out of the market, consider hourly as what? Your structural time frame. I want you to take a biro, a paper, or take a screenshot of this time frame correlation, because this is what I want you to stick to for now. As you advance in terms of market structure, as you advance in terms of knowledge in market structure, you'll be able to digress a bit to suit the kind of thing you want to be doing. But for now, stick to this time frame: 4 hourly, 50 minutes, 1 hourly, 5 minutes. Okay, just a quick note, please. If you're gaining any value from this video, please hit the like button, subscribe to the channel if you're not. Okay, so let's go. Let me get rid of it. All right, let's get into the real deal of the day. Let's go break down some charts. Let me look for example. Okay. You know what? Let's break down this movement here. We moved from here, we start create a double top, and we start violating structure down. Alright, creating lower low and lower high, lower low and lower high. Now, from the previous structure, you mark the top, right? These are the places you want to get into the trade, these zones. Now let me use this price action as an example, so that we'll go to the lower time frame to go and observe how they are formed on lower time frame. Let me get rid of this. Okay, now we'll have a higher high and a lower high created here. Okay, then lower high created here. Let me map as normal. Okay, these are my chart. You have a higher low created here. You're waiting for this pullback to occur before executing a trade. All right, before executing a trade, let me map only the candles, and we'll go down to the lower time frame to go and observe how they form into this zone. Okay, let me change the color so that you'll be able to see it very well. Yep. Okay, now what are we expecting to see? This is my own structural time frame, 4 hourly. I'm a day trader, I'm a day stroke intraday trader. I don't scalp. That's me. My scalping are high, they are rare. Now these things happen according to your own type of trading, either swing, in scalping, or not. That map out your structural time frame, because okay, now we pushed we push down here, right? We're waiting for this and the pullback phase in order to get into the trade. How do we see here before executing a trade? That's what we're talking about here, right? So we'll go to the lower time frame to go and observe how these things form. Okay, so as a day trader that I'm scaling down to 15 minutes to go and observe this chart pattern. Right here on 15 minutes, let's look for that same place we marked. Okay, this is it. Let's see how this price action develop in this zone. Okay, bam. Come on, what's happening? What's happening to my mouse? Okay. This is the real thing, man. This is the real thing. I love this, man. Okay, let me zoom in so that it will be so clear. Look at how we start forming. Remember, we have created the push phase on the 4-hourly time frame, and we're waiting for the pullback with some confirmations before executing a trade. That's what we're waiting for. Alright, let's break down this. Let me get rid of this, man. Let me get rid of this. Yep. Okay, look at how we start forming from down here. We're creating lower low, lower high, lower low, lower high, and we start creating a break structure, and we start pulling back with this corrective move. We never break below, creating higher high, higher low, higher high, higher low, higher high, higher low. And now this is on 15-minute time frame, but you know, for hourly time frame we're just like 3 or 4 candles, creating higher high, higher low, creating higher high, higher low. Then we fail to break above the pattern I told you, sign of reversal. Once you see this, you probably know, okay, definitely the end of this trend has come. Then you break below. The moment you see this, pause. Okay, this is where the whole thing starts. Look at how we start forming. We break structure, we break structure above, 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 and here we fail to break above and create equal top. Now we break below. The moment you see this, the candle that caused that break, the bullish candle that caused this bearish movement, map out the candle. Okay, this is that candle. Map it out. That is your entry point. As simple as that. Don't make trading too difficult, and then you go short from the point. Then set your stop loss just above the wick. Give it some room. Where will your target be? The same place that you start violating structure from. This is how I set my own TP. The same place that you start violating structure from. Where do we start? We violate structure from here, and this is where your target should be. From here down toward this place. Okay, as simple as that. Can you see how we have related 4-hourly time frame down to 15 minutes to find entries? Please note, this thing works according to the time frame correlations I've given. Daily to 1 hour, 4-hourly to 15 minutes, which is this example. Then an hourly to what? 5 minutes. Because once a higher low is created, more often than not a higher high will be created on structural time frame. When there is a pushback, more often than not the market push forward. Okay, you just have to do this, and once you have set trade, allow it to run. Okay, and forget about all this break of structure below, and we'll go ahead and show hit TP in this. Come on. And that's right. Did we hit? Okay, we actually hit TP. We hit TP. Alright, this is how you enter the market. And again, you go back to your structural time frame, the 4-hourly time frame, to go and check. Sorry, man. That's how you will have entered the trade. That's how you will have taken that trade, taking advantage of the higher time frame, looking for confirmation in your zone on your lower time frame, then get into the market, targeting the previous lower low or the previous higher high that was created. This is in the case of a bearish situation. I think we should look for a bullish situation. We have this move here, all the way, this push phase, right? Probably and the candle that caused that, oops, sorry, we have this push phase, and the candle that caused that is this candle here. They will map out this zone. All what we are waiting for is a pullback at least to this zone. Now you see that this push is too high. The market cannot pull back straight into this zone more often than not. Okay, it will come into 15% retracement or 61.8% retracement, and this should be around this zone. Okay, so what you want to do is, what I normally do once I see this type of movement, I map my potential retest zone. This is my potential retest zone. Anything that comes close to this line here will be my entry. So you map. Let's go to check the pullback phase on this, because we want to see how we can get into this market right from here, this zone here. Okay, so let's scale down to the lower time frame. You know what, let me change the color of this as well so that we'll be able to see it clearly on lower time frame. Down. It's getting sweeter, right? If you know you're getting value from this video, please drop a comment below. I am getting a value. Let's change the color to yellow. Yes. Now let's scale down to 15 minutes time frame. As usual, let's zoom in to see the behavioral pattern of this same zone. Okay, let's see how it formed. Let's see. Dun. Okay, you can see the behavioral pattern. 4-hour time frame has pushed. We are waiting for the exhaustion phase or the pullback phase on this 15-minute time frame in order to capitalize on the 4-hourly time frame, the next extension phase. Okay, let me delete this thing and let's break down this chart. Look at how we start moving from here. We create a lower low, a lower high, a lower low. We didn't break above. All right, equal tops, we create below, then we violate structure here. Now this is that kind of a place you take a trade. Normally you wouldn't like to trade within this zone because it's too choppy. That's why you have a potential retest zone, and your potential retest zone is something very close to this horizontal line that we have marked on a higher time frame. And we go on to start creating the same what's it called, higher low, breaking structure, higher low. Look at how we enter inside this zone, creating lower low and lower high, lower low, lower high. When we come to this part, this is where the whole story becomes sweet. Look at, we create a higher low, we fail to break below. We fail to break below here, and we shoot up. The same thing that we are looking for. Let me zoom out this thing so that you see. We break structure up, and the moment you break structure up, that is your what? Signal. Map the candle that caused that break. What's this? Map the candle that caused the break. All right, and set what your buy limit on top of the candle, then bring back whatsoever. And where are you targeting? You are targeting back to this top, the same place you value structure from. What you are anticipating, you're expecting this, the candle to form back to go and touch this other block, then take off, and that's how you'll have hit another TP again. Good risk to reward. In this case, we have 104. Okay, 124 risk to reward. This is how you capitalize on the lower time frame. And here comes the actionable part, your take-home assignment. I call it. Go to the higher time frame or your structural time frame that you have chosen according to your preference in terms of trading, whether swing, day trading, or scalping. Start mapping those zones, the pullback zones. Go to the lower time frame. Okay, how do I capitalize on this pullback? When should I enter that I will not easily be stopped out? What should I see? Double bottom, pull back to that same zone, and take off. Alright? Go to your chart, your higher time frame, map out your zone, scale down to your lower time frame, and start observing the behavioral pattern, the way it's forming and be coming down. You understand? And observe how you get into the market. And I can bet you, hand on my heart, this thing will skyrocket your knowledge in terms of market structure, and your win rate will be high. It will take you from another level of chart analysis to another level entirely. Okay? So if you find any value in this video, please consider subscribing, turn on the notification. Alright? And if you want me to analyze, just a quick note, if you want me to analyze any chart on any pair at all, whether cryptocurrency, commodities, drop a comment in the section below and I'll attend to all of them. See you in my next video.